The EPF declared a 6.1% dividend for conventional savings and 5.65% dividend for shariah savings for 2021. That's higher than the 5.45% declared for conventional savings and 5% for shariah savings in pre-pandemic 2019. Total distributions hit a new all-time high of 57.1 billion ringgit, beating the previous record high of 48.13 billion ringgit in 2017. This is despite unprecedented COVID-19 related withdrawals hitting growth in the EPF's fund size. The 2021 dividend rate is not only significantly higher than 2020's rate of 5.2% for conventional savings and 4.9% for shariah savings, but also tops the 5 cent per unit income distribution by PNB's flagship Amanah Saham Bumiputra for 2021. According to the EPF, its overall investment assets grew to 1.008 trillion ringgit in 2021, up 0.8% from 1 trillion ringgit in 2020. It saw its first ever negative net contribution in 20 years of 58.2 billion ringgit last year. As for 2022, the retirement fund said it is upbeat on its Malaysian investment outlook due to the low base in 2021, while indicators point to a recovery in economic activities. According to its CEO, Datuk Sri Amir Hamzah, it plans to allocate 1 billion ringgit this year to invest in companies that are at pre-initial public offering stage. He said this will bring more companies to Bursa Malaysia while curbing the flight of Malaysian firms that may otherwise seek investors elsewhere by providing the capital they need. Khazanah National saw its profit from operations fall to 670 million ringgit in 2021 from 2.9 billion ringgit in 2020. This was mainly due to continued financial assistance extended to the group's airline and tourism companies. Its MD, Datuk Amirul Faizal Wan Zahir, pointed out that net asset value or NAV, however, grew to 86 billion ringgit from 79 billion ringgit, despite the challenging economic backdrop. It declared a dividend of 2 billion ringgit to the government. According to Khazanah, last year's profit was also hurt by lower fair value gains and lower dividend income from investee companies on the back of subdued 2020 earnings. It deployed 8.7 billion ringgit in new investments in 2021, with 41.7% or 3.6 billion ringgit invested in Malaysia and raised 4.8 billion ringgit from monetization of assets in its portfolio. Meanwhile, operating expenses were cut to 420 million ringgit from 490 million ringgit in 2020. Debt rose to 48 billion ringgit from 43 billion ringgit in the previous year, and realizable asset value over debt ratio remained healthy at 2.8 times. Khazanah, via Malaysia Aviation Group, owns Malaysia Airlines. The Sovereign Wealth Fund undertakes its tourism operations via themed attractions, resorts and hotels. Banking stocks, being the proxy for an economic recovery, are having a good run, bolstered by mass vaccination. The country's top 6 banking groups in terms of market capitalization saw their market value jump a collective 118.26 billion ringgit since the pandemic first struck. The market cap expansion is almost 4 times the combined market value of the rubber glove makers, Top Glove Corp and Harta Lega Holdings, which stood at 32.85 billion ringgit based on today's closing price. The 6 entities, namely Maybank, Public Bank, CIMB Group Holdings, Hong Leong Bank, Hong Leong Financial Group and RHB Bank, are Bursa Malaysia's heavyweight banking stocks and constituents of the benchmark FBM KLCI. Public Bank saw the biggest market cap jump, an addition of a whopping 36.45 billion ringgit or 74.1% to 85.6 billion ringgit. Maybank came in second with a market cap expansion of 26.6 billion ringgit or 33.42% in the same period to 106.19 billion ringgit. Next was CIMB, whose market value swelled to 51.41 billion ringgit after adding 20.25 billion ringgit or 64.99%, followed by Hong Leong Bank, whose market cap rose 18.47 billion ringgit or 71.12% to 44.44 billion ringgit. Hong Leong Financial Group saw its market value jump 9.58 billion ringgit or 73.52% to 22.61 billion ringgit, while RHB Bank's market cap rose 6.91 billion ringgit or 40% to 24.07 billion ringgit. In a note today, Kenanga Research upgraded the banking sector to overweight from neutral on the back of clear tailwinds towards wider earnings expansion. Its top picks are Alliance Bank Malaysia with a target price of 3 ringgit 85 and RHB Bank, target price 6 ringgit 70 cent. McDonald's Malaysia is investing 1.35 billion ringgit to open 205 new restaurants as part of its Vision 2026 framework. According to a Bernama report, the 5-year business plan will be supported by the hiring of 50,000 new workers, with 100% of the jobs to be offered to Malaysians. MD and local operating partner Dato' Azmir Jaafar said the expansion will bring the total number of McDonald's restaurants to 500 in Malaysia by 2026. The investment will also be utilised to remodel existing outlets. In 2021, the restaurant operator achieved a 15% year-on-year growth, which it attributed to its decision to focus on 4 key business drivers: the drive-thru, McDelivery, its digital platform and McCafe. It said its business performance returned to pre-pandemic levels and outperformed its 2019 results and expects to continue the upward trajectory going forward. At present, McDonald's Malaysia has 318 restaurants and 15,000 workers nationwide. Digital National's or DNBs 5G network will be the world's first commercial network to apply Ericsson's Dynamic Radio Resource Partitioning or DRP, a 5G radio access network or RAN slicing solution. Citing head of Ericsson Malaysia, Sri Lanka and Bangladesh, David Hagabro, Bernama said the DRP enables 6 mobile network operators or MNOs to deliver customized 5G services with guaranteed performance, ensuring configured spectrum resource sharing among MNOs using DNB's 5G network. This innovation also allows each MNO to differentiate its offering to consumers on the shared 5G network. According to Ericsson, network slicing is a key feature of 5G deployment, and RAN slicing optimizes radio resources and strengthens end-to-end slicing capabilities for better resource management. This ensures fast and efficient delivery of services, as well as high-quality user experience required by diverse use cases. Each MNO sharing DNB's network has access to the full spectrum asset to achieve the best possible speed, while simultaneously ensuring the pooled spectrum is efficiently used and maximized among all other MNOs.